When you purchase a property, the first money that comes out of your bank account is the earnest money deposit. This is basically a down payment. It's not income and it's not an expense. And if you do it wrong inside of QuickBooks, it's going to throw the numbers off and you're going to be pulling your hair out trying to figure out where it went wrong. But the first thing you do before you even have the property is put this down. And this is pretty much just promising that you're going to buy this house. So it's gonna go towards the purchase of the house, but it's not quite there yet. And it's not in your control anymore, but it's still an asset. It's very confusing, and that's why I'm gonna go through this by step to show you exactly how to put it into QuickBooks. That way your numbers show the true value of what you're purchasing is, and it goes into the purchase price when it's supposed to. So let's dive in. So the first thing that we're gonna do, it's gonna come out of your bank account, a bank transaction. And you're gonna see it here. I don't have anything right here. So what I'm going to do is show you, say you deleted it, you didn't wanna do it through the bank account transaction, or whatever the case is, you wanna delete it to follow my step by step. You can do that. What we're gonna do is put a journal entry in here. And the biggest thing with journal entries is you got to figure out where the money's coming from and where the money's going. So where the money's coming from is a bank account. The bank account that you're sending the money to get deposited into the deposit or the earnest money account. So the main bank account. And we're reducing this amount. So the money's coming from here. So we're going to credit it because this is an asset. And we're going to credit assets to reduce them. So we'll say it's going to be $3,000 for the deposit. And then where the money is going to is a holding account, what I call an earnest money deposit account. You can call this whatever, you call it deposit, whatever you want. And that way you can understand where it's coming from and or where the money's going and being held. So that is literally it. Okay? So we got the money coming from our main bank account going to our earnest money deposit. We're going to save and close that. Oh, yeah, forgot. Always remember to put our classes in. Since this main bank account isn't attached to anything, I always just put it as general. And then you always want to put this with a property. So in QuickBooks, each property is going to be labeled underneath a class. And we'll say this is 34 Oak. It's just one I haven't used yet. And so the money is coming out of our business bank account, out of our general, just the bank account that we use for all the properties we purchase, and then going into the 34 Oak that we're wanting to purchase. We'll save and close that. And then what's that going to do? The biggest thing you want to do is every time you put in a transaction, you want to come over here to reports and see what you just did. Like how is that affecting the reports? Because this, in all, this is what you really want to see. So what happened was this number right here reduced by 3,000, and it went down here to earnest money deposit on 34 Oak Street into $3,000. Now, what does that mean? That means that we got money into this bank account and we're not, or into a third party's hands, not into our bank account. We no longer have control over it. It's still technically ours, so it's still an asset to us. We just don't have it as like cash or as liquid as cash can be. So now it's into a third party's hands. And once we get to the purchase spot where we're like filling out the HUD and everything, this number is going to be on that HUD. And we're going to have to move this money from that earnest bank account or the earnest money spot account to the purchase price of the building. And that is exactly how you want to do it, step by step, because if you do it wrong, if you put it as income or something like that, then your numbers are going to be off and you're going to come to that HUD statement and you're going to see that and you'll be double counting it because you'll put in that $3,000 again for the purchase price on the HUD statement. And that is a big no-no. So for the next video, that's what we're gonna go over. We're gonna go over exactly how this ties into the HUD statement, and we'll see how to enter a HUD statement. So if you wanna see that, subscribe to the channel for the next video.